Thank you for joining us at XM.com. This is a preview video, the next big test for dollar traders and for determining whether another Fed hike is on the table before year-end will be the October inflation print out on Tuesday. I'm Cristina Marujas. With me today is our senior investment analyst, Marios Hadjikyriacos. Marios, the U.S. economy arguably is holding strong in incoming data, just underline its resilience. Do you think we'll see a solid CPI print on Tuesday?
Hello, Cristina. Yes, I think we are going to get some good news on inflation, for the Fed especially, with inflation coming down. So let's unpack it. The headline CPI rate, Cristina, is expected to have declined in October towards 3.5%, so a pretty substantial decline. Most of that, though, is because of base effects and energy prices. So some hot prints from last year are going to be dropping out of the 12-month calculation now. That's going to help the headline CPI rate to decline mechanically almost. And of course, we saw a very big decline in oil prices during the month. Oil prices fell almost 10% in October, and that's likely to be one of the biggest factors in pulling inflation lower. Now, the catch, Cristina, is the following. The core CPI rate, the one that excludes energy and food prices, that's expected to remain unchanged at 4.1%. And that is more important for the Fed because it shows you where underlying inflation is going. And it seems to be going nowhere. It seems to be stuck at around 4%. So some good news in the sense that the headline CPI rate is likely to decline, but not as much progress as the Fed would like to see. Now, as far as any surprises go, Cristina, I think that the risks surrounding this inflation report are tilted to the downside. I think that if anything, we are more likely to see a downside surprise rather than an upside surprise in this data. And that's because of the S&P Global Services PMI. The business survey showed that service companies in the US raised their selling prices at the weakest pace in 3 years. And we also saw some declines in used car prices that might also help a little bit. So I see some scope for a downside surprise in inflation, but nothing too dramatic.
And now let's turn to the market reaction. How could we see the dollar performing on the CPI data? And what is the broader outlook for the reserve currency?
Yeah, so I think that if we get a minor disappointment in the CPIs, that's likely to be slightly negative for the dollar. Now, the question is, does that change the overall picture? To which I think the answer is no. I think that the dollar is still in a broader uptrend, and even if we see a retreat on the CPI data, that's unlikely to change the broader picture. Now, the way I try to think about this, Cristina, is you mentioned earlier, is the Fed going to raise again in December? Well, the market says the rate increase cycle is probably over. So there is around a 20% probability for another rate increase by the Fed priced into the markets. But that probability has been coming down. Instead, Cristina, I think that the real question we should be asking ourselves, especially heading into next year, is which central banks are going to be cutting interest rates, and how deep are they going to be cutting interest rates? And the answer to that is going to determine which currency outperforms in the FX market next year. And in that sense, I see a situation where, because the US economy is more resilient than Europe, for example, the ECB is likely to be cutting interest rates before the Fed. So that might be a factor that allows the dollar to remain in a broader uptrend.
Marios, thanks so much. This was a preview video here at XM.com.